Welcome back to Trading Hour. As promised, we have Jyotivardhan Jaipuria from Valentis Advisors to discuss market fundamentals and its top sectoral picks. Thank you so much for joining us, Jyotivardhan. First up, how are you? What are you making of the market currently? We are at elevated valuations, but there doesn't seem to be anything that is stopping this particular rally. What worries you at this point of time?
Yeah, so like you rightly said, the valuations are not cheap. And historically, from these sort of valuation, returns over the next 1 year have not been very high. It's not like they've been negative, but they're probably single digit sort of returns which are there. So at this time, it's always in the market, it is what is the margin for error. The margin for error is quite low. The margin for safety is low at the moment. But things are still looking decent. The economy is doing fairly well. I think more important is that the macro fundamentals are good. Like if we think of the fiscal deficit, we think of the current account deficit, all those things are under check. So that is, one of the biggest positives in the market today.
Pharma is a space that you've been bullish on. Is this a recent addition that you've started accumulating more and more of pharma? And in pharma, what is it that you like?
No, so Deepa, pharma is something which we've been adding for the last, I would say, 14, 15 months. And the change we made was earlier we were quite positive on the domestic pharma, but like 15 months ago, we turned positive on the US generics. And that's why we made a lot of the additions. All the companies get to US generics. If you see for the last 5, 6 years, the US generic prices were continuously falling. And so what we were having a situation is that part of the business was bleeding for everybody. So our call was that the US generics have bottomed out. Prices will fall at a very slow pace or they'll probably remain flat and the demand continues to be good. So we were like, buying more and more companies which were geared to the US generic business. And that's why we've done a lot of additions. The other thing which we've held for a long time and we continue to hold is the whole CDMO space. So that I think is a very interesting space, will do very well. We own a couple of small companies in the CDMO space, which I think will have multiple years of growth. So, if you just think of next 5 years, 7 years, can they grow earnings at 25% sort of range? Yeah, it's possible. And that is the other space we have in pharma.
Jyotivardhan, you spoke about the pharma pack and especially within that you spoke about the CDMO space. How much of a trigger do you think is, the likely imposition of the US Biosecure Act going to be as far as the entire value chain is concerned? And when you speak about, generic pricing, halting, where do you expect it to stabilize?
So, I would say generic prices probably are not going to go up much, but they're probably going to be flattish around these levels. But what you've seen is a very continuous price drop over there for the last 5, 6 years. So, a lot of the price drop happened because there was a consolidation of the chain in the US. And that led to, squeezing of the prices because the buyers became bigger. But I think that is more or less done. And now we'll probably see a bit of, stabilization of prices because demand is fairly robust. Now, the Biosecure will be good for India. So it will be good for the CDMO players and it will help, move things to India from China. So on the margin, again, that's one more addition to the positive for the pharma space.
So would you still buy pharma right now, the US generics or any of the CDMO players? Because you just said, the generic prices have stabilized after the recovery. So is there still upside?
So there's still upside, Rima. There'll not be as big like, when we bought it, like it's seen huge upside after that. But from here, we'll get a steady 15% sort of returns in them, probably even 20% sort of returns. The CDMO space is something which I think is good. Like I said, it's something where, very secularly you could see like 20 to 25% sort of earning growth in many of these companies. So they'll be much bigger than where they are today in the next 5 years. It is a volatile sector. It doesn't lend itself to like quarterly numbers because there are some quarters where it can be very awful. But what you have to do is just stay the course. And for the next like 3 years, 5 years, we know that these companies will be much bigger than what they are today.
Jyotivardhan, I just want to squeeze in one last question. What is your view currently on the financials as well as capital goods, especially capital goods has done very well, if you're looking at it from the last 3-year point of view?
So, we were very early into capital goods because we had this whole theme that we liked investment theme rather than consumption theme. On the margin, we actually selling some of our capital good names, largely because of the valuation. So the stocks have done very, very well. And we have this whole, free use philosophy. So they're no longer undervalued. They're no longer underperforming. And now, they're reasonably owned also. So on the margin, we are selling. We're not sold everything because we still think there's a lot of earnings growth going over there, which we do. We are actually putting some incremental money in the banking space because that space is totally ignored just now. It's like, done very badly. And things there are, it's one of the few spaces where there's value. Most of the stocks now are trading at very high valuations, and you have to bank on growth coming to generate stock price returns. But bank is one space where there's actual value, and there's 2-3 quarters of pain in terms of the NIMs. But I think given the valuations we can make decent money in the bank names from this level.
Jyoti, short conversation, but a good one. Thank you very much for joining in. We need to slip into a very short break. On the other side, we'll focus on Nykaa and we'll invite Karan Taurani of Elara Capital. Stay tuned.